Hello, everybody. This is Jeremy Johnson with Flyer. Today, we're going to discuss how to capitalize on the unmet demand for RV and marine storage, also known as specialty storage. David N. Baker is managing member and owner-operator of Mercantile Automated Properties, LLC, a portfolio of self-storage facilities which he acquired, redeveloped, and turned around to become cash flow positive. Mr. Baker is also managing member of Mercantile Advisors LLC, providing an ongoing public accelerator for private companies, corporate advisory for micro cap and small cap public companies, and digital exposure for companies seeking to complete offering campaigns and expand their investment community visibility. As you can see, Mr. Baker has a great pedigree and experience as a deal sponsor. David, are you ready to go?
I'm ready to go, Jeremy.
Okay, I just got a couple questions.
Thank you.
The first is, why are you developing specialty storage versus traditional self-storage?
Great question. So we're developing specialty storage because it's our view that not only in Las Vegas, where this facility will be constructed is located, but nationally, that self-storage is really saturated. And it's confusing to me why the insurance companies, pension funds, REITs are continuing to build. But our view is that self-storage is very saturated. In contrast, specialty storage, RV storage, marine storage, vaulted, cold storage, all the specialty storage areas are underserved. So that's why we're doing specialty storage. We currently own and operate the majority of 3 and the minority of a 4th facility that are self-storage. And those facilities were pre-existing facilities in pre-existing locations built 15, 20, 30 years ago. And as you mentioned in my bio, we bought them distressed, bad locations, poor conditions, low occupancy, and turn them around. But we think for new, being built, to be built, just built, self-storage, it's highly saturated and arguably a dangerous way to go for storage investors these days.
I see. Next question is, why Las Vegas?
So Las Vegas for many reasons, putting aside the fact that I've been there the last 4 years and 7 years back and forth, several things. First and foremost, it's underserved in specialty storage. So there's currently one facility that's been constructed, been condo converted into condo garages, and each of those spaces have been sold off. I believe 70, 80% of it's been sold in the last year. There's one other facility under construction currently in Henderson, which is sister city to Las Vegas, under construction, and there's no other facilities, to the best of our knowledge, in construction or existing that are this specialty enclosed storage set up for RV marine. So first of all, it's underserved. There's a huge demand for it, very little supply. There's other things that keep property values up and demand continuing. For example, migration from California to Las Vegas, that continues to happen at a torrid pace. Real estate values have held up through COVID and gone up actually significantly. Indications of that are, for example, I believe it was Blackrock that bought MGM's real estate underlying all their casino operations last January, February, right when COVID was just beginning, and they didn't hesitate. Amazon's expanding there with new warehousing facilities. And so there's a lot of drivers to Las Vegas.
Very nice. So with all that detail, why don't you tell us about the Zenith Storage opportunity?
Great. Thank you, Jeremy. So what we're constructing, what we're building, what we're developing is a specialty storage facility for RV and marine. It's a highly amenitied facility, and I'll go through it. We've accomplished a lot, and I'll go through the milestones. We started it last April, May. So we've been doing this 7 years, again, focused on distressed, bad location, poor condition, low occupancy, turning around self-storage, and now because of the saturation, moving into specialty storage. I think the most important thing is that people that you're investing with have experience. So we've been doing this 7 years, and every sort of problem you could imagine we've dealt with. In terms of some of the economics here, we want an affluent clientele. I think that's important, but anyone that has our large RV or boat, which this facility is set up for, is going to meet those requirements. There's a special dividend I'll get into later. Another economic thing, we're expecting that the value of the facility or the project will be 2.5 times the value once completed, based as compared to cost, and then cash flow will begin. And then again, competition is limited that I've discussed. I'll go back to the special dividend a little bit later. Next slide, please. And Jeremy, I don't know, are we taking questions throughout or not? How much time do we have?
We have about 21 more minutes, but yes, we can take questions throughout. So if you have any questions,
so,
just ask them and we'll mix them in.
Okay, and I'll just blast through the deck then, because it's the only way. Business model, I'm not really going to go into. Next slide. Okay, milestones achieved. We bought the land April, May of last year, bought it at a 50% discount to the comps from a family office that's been buying property and owns over 100 properties in Vegas. They didn't know what to do with it. The land is zoned for storage, and that's what enabled us to buy it at a 50% discount to the comps. After we got into contract, 5 or more buyers tried to buy it, but we ended up closing on it. We acquired Las Vegas Board of County Commissioner planning approval November 18th of last year. People thought it was impossible. It wasn't easy, but we hired fabulous land use lawyers, and they didn't charge us a lot. Don't tell them that. And they prevailed for us. We have a great team of architects, land use lawyers, civil engineers, etc. So we got approval. We closed on the land 12 days later, November 30th. We have a bank commitment for 85% loan to cost. I don't want to have that much leverage. I can explain later or in questions, but short version is we just don't want to, we don't want that much leverage, and we want more cash flow and to be much more conservative, maybe a 65% LTC. Where we are now in the project, engineers and architects are moving forward to the permit process. Expect to get the permit around September-ish. We're now at a point, in my opinion, where it's not a high-risk point of the project. The high-risk point is getting planning approval, closing on the land, etc. We're through that. Next slide, please. Customer value, I'm not going to go into all this again, limited on time. I'll just say the number one thing that customers, tenants care about is security. To that end, we have planning approval for 8-foot high walls and transponders and all sorts of security with cameras, lighting. It'll be lit up like a soccer field at night, and we're really focused on security. That's what tenants care about. Okay, Vadim, you beat me, good. Okay, so this is an example of a rendering of what inside of the unit will look like. Epoxy sealant on the concrete pads. It's nice for the tenants, but it's really more for the ownership, for the investors, for the people that own this facility, to protect the asset. We have electric vehicle charging stations, high lumen lighting, electric vehicle charging stations. There's Wi-Fi connectivity so the tenants can look in at their own assets whenever they want. There's evaporative cooling, which works very effectively. It's analogous to air conditioning. Technically, it's not air conditioning, but it works incredibly well. So a place like Las Vegas, it's an economical and highly efficacious way to cool the units. Next slide. These are the properties that we're involved with. The first, moving from left to right, the first two we own the majority of. The fourth one on the far right, we own the majority of. The middle one, or the third one from the left, is a joint venture with our partner, Caliber Companies, Inc., fantastic private equity firm in Scottsdale. Fabulous people, fabulous firm, and we're partnered with them on this one. Next slide. So this needs to be updated, but this is a quarterly income performance slide through Q2 of last year. The important thing to know is that we went down a few percentage points during COVID, and then it just bounced back up. Now we're actually producing record revenues and record profits for our facilities, and we just couldn't be doing better. So this is just our track record in case you wanted to see, and when we bought the facilities, and now the line's moving up to the northeast quadrant. Okay, next slide. This is capital appreciation of our facilities. We've labeled them alphabetically with the facilities and how we've done it compared to, let's say, CubeSmart, the REIT Index, S&P 500. Actually, the numbers are higher now. We just got our facilities reappraised, but we've done well. Again, you want to buy things that people hate, that are in terrible condition, and everything they teach you in business school, don't listen to. Next slide. Here's the property. It's highlighted with a green outline around it. As you can see, it's residential. There's some commercial too. There's a Lowe's down the street. high car counts. Actually, they're higher than the 9,000 CPD now. I believe they are. You can see in the to the upper right of the photo the strip, so it's not very far away. There's not a lot of land left, as you can see from the photo. Next slide. Jeremy, how much time do we have left?
Sorry, you have about 15 minutes. We do have a question if you
Okay.
want to take one or keep going.
Sure. Let's take one.
Cost of steel has gone up dramatically. How is this affecting returns?
Well, we're not to the construction stage. Steel has gone up. We think it's going to be a nominal impact. It might be 5%.
Okay.
Obviously, I can't predict steel prices, but it'll probably affect the project to the tune of maybe 5%, maybe less. But let's just say 5%.
Okay.
Next slide. Oh, okay. So this is. Oh, go back, Vadim, would you? Thank you. So this is just a rendering of the facility, but the dark area on the roofs, that's solar. So we're going to have it solar enabled to lower the operating costs. Next slide. So this is the site plan, actually the one that was approved by the Las Vegas Board of County Commissioners. It's 3 buildings, 49,774 net rentable square feet. And there's signage in the front, about 35-foot high signage. And we were able to go on the left side of what you're seeing, we were able to go all the way to 0 lot line, and on the right side, 10 feet of space to the fence instead of 20. I think we got 5 out of the 6 variances we applied for. Next slide. So this is a map showing you the distance from our facility to Lake Mead, a very popular place for recreation. So it's not very far, and we're almost as close as you can get to the mountains in terms of our location. The mountain area is actually mining claims and government-owned land, so they can't build and they can't really get closer to the lake. Next slide. So this is a timeline. I'm not going to go through all of it with you, but we moved the timeline from last year forward a little bit because Nevada County decided that they're only going to work 4 days a week instead of 5, so it pushed things out a little bit. But we're on track with this timeline. So we expect to get the permit September, October, and break ground, start building. I'll mention the special dividend now. And so there's a special one-time event dividend that we'll issue to any investor who comes in before we get the permit. Once we've got the permit, we're going to, per the operating agreement, that special event dividend goes away. Next slide. Not going to go through all the returns with you, but you can see basically the projected returns, and you'll see they go down over time because the greatest return comes from taking the project from raw land to a completely constructed, fully leased up facility. That's why the 3-year average is the highest. And let's see, this does not include deductions from depreciation, cash out refis, etc. Next slide. Not going to go through this with you as well because we don't have enough time, but you can see where the greatest propensity of return occurs in the in years and how we've modeled the out years to be a very conservative return, both in capital appreciation and dividend yield. You'll see in 2022, it says 0.42% is the projected dividend. That's because we're in the middle of construction. But in consideration for that, you're getting a special event dividend of 8%. So it helps. Next slide. This is just using dollars versus percentages. So it's really nothing that was unlike the previous slide. Next slide. This is a list of technology and capital investments we're making into the facility. Won't go through all of them with you, but we're trying to implement as much technology as possible. By doing so, it becomes less human resource intensive and less operating costs over time, more efficient, less room for error, more humans, more error, basically, and more problems that all the business owners on this call are keenly aware of. Next slide. Jeremy, any questions?
Yes. How much do you project these units will rent for?
Our model calls for anywhere from $700 a month to $775 a month.
Very nice.
I think for the purpose of this presentation, we're modeled at around $715. Don't hold me to it, but approximately. And assuming we get the permit in September, October, it's an 8-month build, so we'd be renting by June, July of next year. So I think our numbers are reasonable and not aggressive. Any other questions, Jeremy?
You spoke on this like insatiable demand for RVs and these types of devices and assets. Why do so many Californians come and like to store them, or people in general, in the Las Vegas market?
Well, it's hard to say. I mean, everyone has their reasons, but geographically, Las Vegas is a central location to get to many places. So it's, central to get to California, it's central to get to Texas, to go down to Arizona, to go to Utah and Idaho. So that it's very centrally located, and things are less expensive there. Gas, food. I mean, just a less expensive place than a lot of ultra urban places. Let's say Southern California.
Got it.
Do we have another question?
With the vaccines, how do you think the Vegas market, how did it weather it, and how do you think it'll respond going forward?
Okay, let me see. Let me give a Switzerland answer. The governor has decided that soon we'll go to 35% capacity in the casinos, and real estate values have again gone up, not down, especially storage or anything storage related or warehousing related. And I'm extremely bullish on the Las Vegas market. So it's not because I want to be a hoper. It's just the evidence continues to support this. And anything that's cash flow producing in a state without high taxes is an attractive place to invest.
Okay, great.
Vadim, next slide. Okay, financial summary, not going to go through this with you. We don't have time, but we're happy to get the deck out to anybody and everybody who would like the deck, so we'll send it out to you. But it's consistent with the return profile slides starting in 2022. Vadim, go to the next slide, offering summary if you would. Okay, so $21,000 minimum investment. Accredited investors are the investors we're allowed to accept. Special dividend we spoke about. And I guess one thing that investors care about is liquidity. So investors can get out of the investment if they want at market value at the completion of the third anniversary of their investment, so they can exit. So those are the major things here. So
we have another question if you want to take it, or you want to keep going.
No, please. I think is that the last slide, Vadim? Can you check? Yeah. Okay. No one needs to see my pretty face. Okay, we can go back to
all right.
To the offering summary. Okay.
How does this is from Bill Douglas? How does this product compete with the toy condo developers with the for sale products? Thank you. Right.
Well, I'm not a toy condo expert, but I can tell you that they're more expensive to build, and they're going to have to really juice the rents or juice the sale prices, depending if they're condo converting them or renting them, very high. I mean, to me, it's a much higher risk proposition, because what we're doing here is we're putting in a lot of amenities, but they're not very expensive during the construction phase after they would be, in contrast to the toy condos I've seen. And again, I'm not an expert on it, but I know a few people that are actually developing them, and they're very, very expensive. So I think that's a high risk project, those types, but that's my opinion.
So can you speak to some of the technology that you're using? You mentioned the labor oftentimes is really expensive in running some of these facilities. And can you talk about how your use of technology is differentiating this from other specialty storage offerings?
Yeah, and just to be clear, because we're not a technology. This business is not a technology company. We're implementing as much technology as we can. So other people could buy the technology too if they wanted to. But we're implementing things like laser perimeter. We talked about the 8-foot high walls, which are not really technology. Transponders, so there's no keypad to get for ingress and egress out of the facility. It's all transponder and fob related. So that's more technology. We'll have a kiosk, so that's like an ATM machine for rental, so people outside could actually rent, could come into the facility and then rent through the kiosk. We'll have unit alarms on all the units. We'll have, as I mentioned earlier in the presentation, we will have Wi-Fi access and cameras so tenants can look in on their property. So there's a lot of different things. Facility management software is quite sophisticated, very, very sophisticated. So there's a lot of technology.
Someone asked, will you be implementing any of this with your other self-storage facilities?
We have implemented some of the things. We've implemented unit alarms at one of the facility, kiosks at 3 of the 4 facilities. The 4th one is like a mobile kiosk. We've implemented that. The latest facility management software is at all of the other facilities. Cameras and lighting, all that is standard. So all that's in the other facilities. But to go back and do, evaporative cooling or electrical vehicle charging stations at the other facilities would be quite expensive. It might make sense to do a few units at each facility, but to do that in mass as we're doing here in new construction would be too expensive, really cost prohibitive, and it would take away from the return profile of those facilities.
Can you speak to the actual demographics? Like, what is the archetype of the people or the profile of the people who typically are a customer of this type of product?
Sure. I mean, they're generally professionals. They're high net worth people because they're people that can afford to buy toys, buy a Class A motor coach that's $250,000 to $1 million, to buy a $50,000-$60,000 Airstream, to buy a $50,000-$60,000 boat. So they're professionals, entrepreneurs, other types of high net worth people. They're retired people that have worked all their lives, exited their business, and now they want to travel with an RV or a boat or both, etc. So they're high net worth people and professional, hardworking people, and sort of all facets and forms that have disposable income for these kinds of things.
Can you reiterate the backlog on RVs that you spoke on earlier? And do you think this will continue?
Yes, I think the backlog will continue for a while. I think several years. First of all, it's not easy to get an RV marine facility entitled by planning. That's a very, very difficult step. So that's one prohibitive thing. 2, finding land that's available is very challenging in the Las Vegas area at any reasonable price. 3, there's just so little of it and so much demand in terms of people that have ordered or just received RVs. Same with boats. When it's hard to even get a bicycle sometimes. The bikes are getting easier, but it's just so difficult to get these things. And I think the demand will continue for a long, long time. I think people, if they have a choice of telecommuting, if they can run their law firm practice, or they're a software engineer for a firm or whatever their business is, if they can do it from a lake or a mountain or a parking lot above the ocean, they'd rather do that. Why do they have to stay at home? So I think the mobile lifestyle is here to stay, and it's only going to drive demand for facilities like this. And I think this is secular. I don't think this is a 1 or 2 year fad. I think this is, around for 10, 20, 30 years or more.
Yeah, I think we have one last question, and I'll read it for you. And then after that, I'd say you kind of do your conclusion, okay? So the last question is, how many units per storage facility? And all of them are located in Las Vegas? Question mark.
For the self-storage, no. 2 are in Las Vegas, or Las Vegas and Henderson. One in Henderson's on the other side of the fence from Google's data center. We were there first. Then there's one in Logan, Utah, and then one that we're partnered with, Caliber Companies, Inc. out of Scottsdale and Casa Grande, Arizona. Units vary in size from, let's say, 250 units to 350 units, plus or minus. And then this facility will be about 52 units at something like 49,774 net rentable square feet. So it's fairly small on 2.33 acres. Just as much land as we could buy.
Okay. Why would this be a better investment than going in public markets?
I mean, I can't prognosticate how someone's going to do in public markets. It depends what they want to do. This is generally historically a highly stable, cash flow producing, hard asset investment versus whatever somebody would participate in the stock market. So I certainly can't make such crystal ball readings. I know this has been a great asset class for us over the last 7 years. It's something where I can go to sleep at night and wake up in the morning and I don't turn on my screens and see double dash, and the cash flow rolls in. And when you do a good job, it rolls in like Waimea Bay in the winter. And if you don't do a good job, you won't make money. But if you work hard and execute well and are meticulous and have involved with great partners, you'll do well.
Thanks, David. Do you have anything to conclude?
Thank you, everybody, for your time and your prospective interest. If you want the deck, please reach out, and we're happy to get it to you and speak to you with more color about the opportunity. And Jeremy, maybe you want to explain to people how they can acquire the deck and reach out.
Why don't you give them your phone and your email, and we have the marketplace listed on our site, and I can also send anybody who wants the information.
Sure. So my phone number is area code 415-297-4749. That's 415-297-4749. My email address is DNB as in David Nancy Boy, DNB at storage, STORAGE, the number 24, letter X as in X-ray, number 7.com, DNB at storage24x7.com.
Thank you so much.
Thank you, Jeremy. Thank you, Michael.